What if I told you that the way most people invest their money is designed to keep them average, while the wealthy play an entirely different game? You see, the truth about investing isn't found in flashy stock tips or get-rich-quick trends. It's in the systems, quiet, boring, predictable systems, that the rich built for decades to make money, even while they sleep. You've probably been told to save, right? Work hard, save money, and you'll be fine. But here's the uncomfortable truth. Saving money alone is the slowest path to wealth in the United States today. Inflation eats away at your cash every single day. That $10,000 sitting in a savings account, in 10 years, it might buy you half of what it can today. Meanwhile, the wealthy are turning that same $10,000 into assets that grow, produce income, and appreciate over time. They don't work for money. They make money work for them. And if you don't learn to do the same, you'll stay trapped in the cycle of trading your time for cash, watching your savings lose value while prices rise around you. That's the quiet fear most people never talk about. The fear of running out of money while you still have life left to live. But the wealthy, they've already built defenses against that. Let's talk about what they're doing differently. The wealthy understand that every dollar is an employee. Your money can either sit idle, collecting dust in a savings account, or it can go out into the world, work for you, and come back with friends. So where do they send it to work? Let's start with the stock market, but not the way most people think of it. When average investors buy stocks, they're often chasing the next big thing. They follow hype. They panic when prices drop. But the wealthy? They buy ownership. They don't buy stocks to gamble. They buy companies to own a piece of cash flow. Take Warren Buffett, for example. When he invests, he's not thinking about what the stock will do next week. He's thinking about what that business will earn over the next decade. He's buying consistent profits. And while others sell in fear, he buys in silence. If you want to invest like the wealthy, learn this. Focus on cash-flowing assets, not price speculation. That includes dividend-paying stocks, index funds, and ETFs that track the S&P 500. These are the foundations of most wealthy portfolios because they provide steady growth, consistent returns, and compound wealth over time. But that's just the beginning. The real wealth, generational wealth, is built in ownership. That's why the wealthy love real estate. They understand something most people miss. Real estate is one of the few assets that pays you three ways. It appreciates over time, it generates cash flow every month, and it gives you tax benefits. When you own property in the right market, say a duplex in Austin or a short-term rental in Miami, you're not just collecting rent. You're controlling an appreciating asset that can be leveraged for more capital. The bank gives you money to buy it, your tenants pay the loan, and you collect the difference. Over time, your equity grows while someone else pays down your debt. That's how the wealthy use debt, not as a burden, but as a tool. Meanwhile, most people fear debt. They see it as a threat, something to avoid at all costs. But for the rich, good debt is leverage. It's a way to control more assets using other people's money. Think about it. The bank doesn't care how many hours you work this week. They care about what your assets can earn. That's why the wealthy are always borrowing to invest, not borrowing to consume. They don't buy liabilities, they buy income. If you take one thing from this video, let it be this: you will never outsave inflation, but you can outinvest it. And speaking of investing, there's a secret that almost never gets talked about in mainstream financial advice. The wealthy don't just invest in assets, they invest in systems. They build portfolios that pay them automatically. They automate their investments, set up dividend reinvestment plans, and let compounding do the heavy lifting. Most people try to time the market. The wealthy own the market. That's why they focus on long-term growth sectors like technology, healthcare, and renewable energy, industries backed by innovation, not hype. They understand that the US economy rewards patience, not panic. Now let's go deeper. The wealthy don't just invest in traditional markets. They're diversified across multiple income streams. They invest in private businesses, either by owning them or by investing through private equity or venture capital. They understand that business ownership is where true wealth is made. Think about Jeff Bezos, Elon Musk, or even the owner of your local chain of car washes. The difference isn't luck, it's ownership. When you own something that produces income without requiring your daily presence, you create freedom. But you don't have to be a billionaire to do that. You can start small. You can invest in small businesses through platforms like Mainvest or buy into franchises that are proven to generate consistent returns. That's how many American millionaires are made, not from viral trends, but from boring, steady cash-flowing businesses. Let me tell you something that might surprise you. Most self-made millionaires in the US didn't get rich from crypto or day trading. They got rich from boring investments that compound over time. Index funds, rental properties, small businesses, and steady reinvestment. But there's one investment the wealthy make that outperforms all the rest. And it's not something you'll find on a chart. They invest in themselves. Before they made their first million, they were learning how money works. Reading books on investing, studying the psychology of wealth, hiring mentors, attending seminars, surrounding themselves with people who think differently. Because wealth starts in the mind long before it shows up in the bank. You can't outperform your mindset. If you believe money is scarce, you'll live that way. But if you see money as abundant, as a tool to grow and multiply, you'll act differently. That's why financial education is one of the most profitable investments you can ever make. And that's what most people never do. They stop learning once they start earning. Here's the harsh truth. The average American spends more time planning vacations than planning investments. The wealthy do the opposite. They plan for financial freedom. They plan for time freedom. And that's what this is really about. Not just money, but control. Because when you don't control your money, it controls you. You wake up to bills, deadlines, and debt instead of opportunity. You work harder but feel stuck in the same place. That's not freedom, that's financial servitude. And the scary part? Most people won't realize they're trapped until it's too late. The middle class is shrinking, inflation is rising, technology is replacing jobs faster than people can reskill. If your money isn't working for you right now, it's falling behind. But here's the good news. It's not too late. You can start applying the same principles the wealthy use. You can learn to redirect your cash flow into assets instead of expenses. You can build a portfolio that pays you every month. It doesn't matter how much you start with, it matters that you start. Because compounding doesn't care about timing, it cares about consistency. Every dollar you invest today is a soldier fighting for your financial freedom tomorrow. And while most people wait for the right time, the wealthy know the best time was yesterday. The second best time is right now. Imagine this, it's 10 years from now. Two versions of you exist. One kept saving, spending, and hoping. The other started investing, learning, taking small steps, and building. Which one is free? The answer depends on what you do next. Because in the next few years, the wealth gap will widen more than ever before. The people who understand investing will thrive. Those who don't will struggle to keep up. But you don't have to be one of them. You just need to understand where the wealthy are quietly putting their money next. And that's exactly what we're about to uncover. You see, the wealthy don't just chase returns, they chase control. Control over their time, control over their decisions, and most importantly, control over their money. While most people leave their financial future to luck, to their employer, or to the next election cycle, wealthy build systems that make money flow back to them, even when they sleep. That's why one of the biggest lessons you need to learn early is this. It's not just what you invest in, it's how you structure it. Let's take a look at how this plays out. Imagine two people. Both make $100,000 a year. One invests in high-tax mutual funds, pays 25 to 30% in taxes on capital gains every year, and keeps the rest in cash for emergencies. The other uses tax-advantaged accounts like a Roth IRA or 401k, leverages depreciation through real estate, and invests in dividend-paying stocks that qualify for lower tax rates. After 10 years, they've both invested, but one of them has tripled the other's net worth. Not because they worked harder, but because they played smarter. That's the secret most people ignore. The rich don't just earn differently, they keep money differently. They understand the rules of the financial game that most people don't even know exist. Because while the average person looks at a paycheck and sees income, the wealthy look at assets, streams of money that work for them, not against them. They don't say, I can't afford that. They say, how can I make my money buy that for me? It's a subtle shift, but it's everything. Now, one of the most powerful investment vehicles the wealthy use is something most people ignore: private equity and business ownership. You see, owning a business gives you something that no stock or bond can: leverage and control. When you own even a small business, online, local, or digital, you can control your margins, your growth, your customer base, and your exit strategy. That's why, when you study the portfolios of America's wealthiest families, from the Rockefellers to modern entrepreneurs, they all have one thing in common: business equity. That could be owning part of a startup, building a brand, or acquiring existing small businesses that generate cash flow. And if that sounds intimidating, remember, the digital age has made this easier than ever. You can invest in fractional ownership through equity crowdfunding or buy income-producing assets like websites, YouTube channels, or e-commerce stores. Yes, it takes time. Yes, it takes learning. But that's exactly what separates the investors from the spectators. Because the truth is, fear keeps most people poor. Fear of losing, fear of starting, fear of being wrong. But what you don't realize is, not investing is the biggest risk of all. Inflation is slowly eating your savings. Every dollar that just sits in your bank account loses value every single day. And while you're waiting for the perfect time to invest, the wealthy are already compounding their returns. This is how they get ahead. They don't wait for preconditions, they create them. Now, let's talk about real estate, because no conversation about wealth is complete without it. Real estate is the ultimate wealth builder in America. It's how families pass down assets for generations, how investors leverage other people's money to build equity, and how you create cash flow that doesn't rely on your 9 to 5. Wealthy people don't just buy homes, they buy income-producing property. They understand that real estate is not just about appreciation, it's about control and cash flow. You can start small: a duplex, a short-term rental, or a small multifamily unit. The key is to learn how to leverage debt wisely, using banks' money to buy assets that pay for themselves. That's how the wealthy think. They don't see debt as bad, they see it as a tool. Bad debt buys liabilities. Good debt buys income. And here's the thing most people miss: wealthy investors rarely sell. They refinance. They pull out tax-free cash to buy more assets while the property keeps appreciating. That's the power of playing the long game. While most people panic about recessions, the wealthy prepare for them. They know that every crash is just a discount sale on future wealth. Now let's move to another powerful investment category: stocks and index funds. But here's the truth: the wealthy don't trade. They own. They buy quality companies with real earnings and long-term advantages, and they hold. They let compound interest do the heavy lifting. They diversify across sectors, not hype. They use dollar-cost averaging to build positions over time, regardless of market noise. And most importantly, they invest with time horizons, not emotions. When everyone's panicking, they're buying. When everyone's euphoric, they're cautious. Because they understand one thing: wealth is not about timing the market. It's about time in the market. But let's go deeper. The truly wealthy don't just invest in public companies, they invest in private markets. They back startups, innovation, and disruptive technologies before the public ever hears about them. That's where 10x, even 100x returns are born. From angel investing platforms to venture capital funds, this is where serious wealth creation happens. But it's not about luck. It's about information, networks, and patience. You may not have millions to invest yet, but here's what you can do. Start learning how capital works. Follow where smart money flows: artificial intelligence, green energy, biotech, real estate tech, because knowledge is the first stage of wealth, and that's where your journey begins, with understanding how money grows. But remember, none of this works if you keep doing what most people do: spending first and saving what's left. The wealthy do the opposite. They invest first and spend what's left. They pay themselves first. They automate their investments. They treat money like a tool, not a trophy. And while everyone else buys things to look rich, the wealthy buy assets that make them rich. That's why most people stay stuck, because they chase comfort instead of opportunity. They'd rather feel safe than be free. But here's the uncomfortable truth: safety is an illusion. Your job can disappear. Your savings can shrink. your time can run out. But once you build assets, once your money starts working for you, that's when you find real security. So here's your challenge. Look at every dollar you earn as an employee. Every dollar should have a job. Some go to work building cash flow, some buy equity, some protect you through insurance or diversification. That's how the wealthy think. They don't let a single dollar sit idle. And that's why they win. Because money loves motion. It grows when it moves, compounds when it flows, and multiplies when it's managed with purpose. Now, as we wrap up, remember this. You're not just learning how to invest. You're learning how to think like an investor. The moment you stop seeing money as something to spend and start seeing it as something to build, your life changes. Because wealth isn't a number, it's a mindset. It's a set of habits repeated daily that create unstoppable momentum. And the best part? You don't need to be born rich to become wealthy. You just need to start where you are and start today. You can begin with your first $100, your first investment account, your first small property, your first side business. Because once you start, once you see your money grow, once you realize that wealth creation isn't reserved for the elite, it's for anyone disciplined enough to stay the course, that's when everything changes. So don't wait for the perfect moment. Create it. Start building assets. Start thinking like the wealthy, and let your money become your greatest employee. Because 10 years from now, you'll either say, I wish I started, or I'm so glad I did. This is Financial Primer, where your education in wealth begins and your journey to freedom never ends.